Hi, my name is Joe Park, and I'm CEO of Horizon Stewardship. Welcome to the Q&A section of our webinar, Cash Flow Management, Rebudgeting, and Financial Strategies During the Midst of Uncertainty. The recording you're about to see are 55 questions that were submitted to us by listeners in our webinar. Answering those questions with me is Stan Rife. Stan is a partner at Cape and Krause Accounting Company who also helped me with the webinar. I hope you find this Q&A section helpful. Thank you. Out there, Bob is asking this question. Do you have a benchmark or best practice recommendations on how many months of operating cash a church could have? I think you've already talked about that. You want to make a comment on it?
So again, I would say, we really recommend you having a minimum of 30 days to be healthy. And the closer you are to 90 days or above allows you to move from reactive to strategic, as well as being healthy enough as a church. So when you have ministry opportunities presented, the resources are there available to join God where he's at work, and not having finances as an obstruction of not being able to respond positively in that area.
Yeah. Barbara's asking the question, understandably, many congregants have experienced financial upheaval amidst the impact of coronavirus. What are your best suggestions for stopping the decline in giving? And let's talk about some of those numbers. We're seeing there's a number of studies. Cape and Krause has done its own study, but we're seeing right now about 60% of churches are reporting year-over-year decline. Is that what you're seeing as well?
It is. The further we go into the season, the longer it's playing out as the unemployment levels are static. People are just now coming to work. We're hoping to see that trend somewhat starting to reverse. There's certainly been a lot of economic largesse from the government to help with unemployment, a lot of the PPP loan activities. But I would say a couple of things to really answer this question really quickly is find out, again, using what we just talked about, look at who's not giving and place a call real quick. Find out why are they not able, and be tactful, be kind, be sophisticated, but find out how their family's doing, what can the church do to help them? And just asking, because if it's an illness, we can help, we know what's going on there. If it's a loss of a job, we can maybe help them find employment or know that it's seasonal. If it's more of a just reaction to what's going on. But by the way, some churches who do not use a lot of online giving, one of the best things you can do, and we've talked about this in previous episodes of webinars, is have some of your church staff or volunteers send out bundles of envelopes pre-stamped with addresses to those in the congregation who normally would put their check in the weekly offering plate or mailing it in. Make it easy for people to give to your church, but certainly in your communication, what we're finding is the churches who are sharing consistently through story what the church is doing during this time to have impact in the community are the churches who are weathering the economic downturn financially the best. And so going back to what you said earlier, Joe, sharing the stories of not just asking for money every Sunday, but sharing the stories of the impact the church is having in the community is one of the best ways to offset that decline.
So from Horizon's perspective, I mentioned this earlier, we put out a ministry funding guide for COVID-19, what you can be doing right now. And that focuses on getting your recurring giving up, not just electronic giving, but recurring giving. We're thinking that needs to be in the up in the 80% range right now. There's a high corollary between well-funded churches and high levels of recurring giving. I have one church that I coach that is right at the 90%. I do want to say about 15% of churches are just killing it right now. I was on a coaching call with one yesterday. Their year-over-year giving is up. I'm meeting another one this afternoon. They're up about 14 or 15% on their year-over-year giving. And so, I would say it's interesting that the churches that are up are also churches that we've been coaching and that have been putting these practices into place. And so they are finding that even in the midst of all this, that their giving is up. Again, highly situational. Many Episcopalian churches are doing really well now, but they tend to have older congregations. The stock market's still in a really good place. There's some whining about that, but if you look at it historically, where we were 5 years ago and where we are today, it's in a very good place. And so, assuming that everybody's been hurt equally, that is not true. But recurring giving, effective offering talks, engaging your financial leaders. Those are the people who may be giving you half. Some of those folks are hurt significantly and not able to do that going forward. One, you want to be aware of that. Second is most of your financial leaders are actually giving you a pretty small amount of money. Those donors that you're finding in your church that give $10,000 or greater actually are being very generous. And now we're talking the whole top 10% of wage earners. They're being very generous, giving a little over 8% of their resources away, but they're giving the church less and less every year. So a financial leader strategy is important. First-time donor strategies, onboarding those new donors that you've got coming in and how you're receiving them, especially through electronic giving. Are you just sending them a receipt? Or are you engaging them and thanking them and connecting with them? So those are some of the things that we are seeing. Defensive strategy that a lot of churches will be doing that have debt inside their operating budget. And I just use that word, inside their ministry funding plans, will do capital campaigns to take those funds out. People will give over and above, even in recession. Debt retirement campaigns did really, really well because people saw they wanted to deleverage the church. They wanted to restore funding to the ministry spending plan of the church. And so those are some steps that you can take right now if you're interested in the kind of coaching, year-round generosity, or anything that we've talked about today, the analytics, the benchmarking. You can go to horizons.net and schedule a 30-minute conversation and just talk to us about what is available to you and what other churches are doing. There's no cost for that. We'll share everything we can in that 30 minutes with you for free, and hope that you're able to be successful. All right, the next question. This comes from Jeff. Given the longer period of time, can you use all of the loan on payroll or payroll-related costs in that 24 weeks?
Absolutely. That's the good news. As long as you exceed the 60% threshold, you can spend 100% on payroll now that there's a longer pay period or a covered period.
So Joni's asking the question, what are good sources to find grants to help with cash flow? And I assume she's talking about grants that are related to COVID-19. So Stan, what are you aware of?
Well, I would certainly, not knowing, the organization, assuming it's a church or a ministry, I would certainly start within, your network of churches, your denominational support. There may be some available funds from, your geographic area or your national source. Beyond that, if you have a daycare, I know different states that, have different additional programs to help with daycare funding specifically, especially if you're an essential daycare provider. But other than that, I'm not aware, outside of what the federal government is doing, that there's a lot of other funding available specifically for churches, outside of churches helping each other. That's one of the fascinating things that you don't hear about in the media, is the number of churches who are coming to the aid of other churches right now, to just help them thrive, or at least get through this, this time of turbulence with COVID.
So we work with a number of foundations. That's one of our primary points of engagement with the church is through foundations, and many of them have grants that they are giving. Generally, not to just prop up cash flow, but if you're initiating a new ministry and you need funds to kick that off, to pivot, maybe your online needs some additional resources to help along those lines. But churches in general there are not a lot of sources that give grants to churches directly. So I wish I had better news on that, but generally it is our ability to grow generosity within the donors. So Carrie asked this question. My PPP fund date was 4/23. Payroll is paid semi-monthly on the 5th and the 20th. I used the loan to pay payroll on the 5th and then again on the 20th. What is my covered period or alternative payroll covered period? And I think the answer is it's likely to change next week.
Correct. And so the reality is with the extended period of time now, it will be much easier to get past, again, that 75% mark is gone. You now have to just cover the 60% mark. But like the other earlier question, you might actually be able to get 100% of it, in payroll because of the extended timeline now of 24 weeks when we were only calculating 10 weeks to start with.
This is going to help a lot of churches. I know Cape and Crouse has been working with their client base, and most churches were having a really hard time spending that 25%. This is going to make it possible for the vast majority of churches to fully receive forgiveness, which is terrific. There are some catches in there. Full-time equivalents. What's the rule on that? Any changes in the measurement?
Now, one of the things I do get a lot of private emails on, usually after these webinars, Joe, and it's, hey, we go with a 30-hour week or a 32-hour week is considered full-time at our church or our ministry. Can we go with that versus the 40? The answer is no. It's always going to have to be 40 as that denominator. That being said, what you would want to do is for your full-time equivalents, go ahead and put them up at 30 when you're calculating the basis or the comparison, and then use 30 or that 32 again when you're doing your actual computation later. And that will provide the consistency that, for your sake, the consistency then is a full-time person really is only 3/4. So when you're doing the comparison or the benchmark against the current, you'll still be using that 40-hour full-time equivalent denominator that's required by the SBA. And so just know that the 40 hours has to be used as a denominator for full-time equivalency. So instead of putting 40 at the top for full-time employees, if you're using a 32-hour week, just put 32 at the top. And those calculations will normalize between the comparison and the actual.
So Sam is asking the question, you've suggested including cash reserve funds in your operating cash on hand, or do you suggest including our reserve funds in your operating cash on hand for the cash projections?
So great question, and depends on your definition of reserve. If it really is an operating reserve that's available to be spent with management's discretion and board approval, then yes, that is part of your cash on hand because that's part of your reserves. However, I'm very much aware that certain churches have endowments or foundations where the principal cannot be used because it's restricted into perpetuity. So those funds could not be included because they're not available to be spent. So, beyond that, there may be some specifics otherwise. So for example, if you have any missions giving, or if you had any capital, you have a capital campaign going on, you're getting ready to build a new building or acquire a new building, those funds are not available for operations because they're already set aside either for missions or a capital purchase. So those would not be included.
So our good friend Chris Bouchard from the Louisiana Methodist Foundation, is asking about depreciation on your work charts. Churches don't generally pay taxes. Why would they show depreciation?
Great question. So many smaller churches are on a cash basis, and they would not, but they wouldn't really have a balance sheet either. There's, at a certain point, a little bit larger, maybe more sophisticated churches will go with a modified cash. But many times, and just about always, for us, any of your larger complex churches will always go with an accrual basis, which is a full accrual where you have a full-blown balance sheet, and you would have your assets on the balance sheet. And then to be in compliance with generally accepted accounting principles, you would then still report the depreciation on that, even though there is no tax impact or consequence. You still do that because then it also creates either a fund for maintenance in the future, or additional capital CapEx kinds of expenditures.
Thanks, Stan. Suzanne is asking, is there any ruling regarding preschool and specifically for preschools in the legislation that you're aware of? And again, this is not yet passed and it hasn't been fully fleshed out, but let's say that you're aware of.
Yeah, I'm unaware of anything specific. I know we, as a firm and through our colleagues, we have asked the SBA to specifically address the seasonality of preschool, and then particularly as it relates to churches and Christian schools because of the seasonality. So they're aware of it, and they've committed to at a minimum providing FAQs around that and guidance on how that plays out, whether it's in the legislation or not.
So Al's asking this question. Our church has investments in mutual funds. The stock market has surprisingly almost returned to pre-COVID levels. Would it be a good time to liquidate some of that investment in light of the unstable, future unstable economic conditions? You got your crystal ball in front of you, Stan?
So great question. I don't have enough information on the circumstances of the organization. Assuming it's a church, I don't know geographically where you're at, what employment looks like in your geography. If it's Houston and the gas prices are back, oil prices are back, is different than the farming communities. But certainly, if you think that there is volatility and uncertainty about your income in the future, from a cash management, it's always wise to liquidate some of those investments and create the cash reserves you need to, at a minimum, I would say, get to the 30-90 days. And then you can always reinvest later, but then that provides a liquidity while it's back at near highs, versus being forced to sell when things are maybe the market would be in a downturn again, and you're forced to sell to liquidate to get liquidity. So depending on your pressure, your operating reserves, otherwise, if you do need to build your operating cash reserves, this would be a good time to liquidate a portion to provide a little bit more strategic cash reserves for the next 6-9 months.
So Paula says, I'm working with a biweekly pay schedule. What would be the circumstances that would require us to use an alternative payroll period? I guess the first answer is you're not required to, it's an option.
Correct, yeah, and so it would only be if it's to your benefit, to keep it simple. I would say at this point, given that this new bill has come through, and with the extended 24-week period, I think that topic, is now, there's not probably a good reason to. Most likely there'll be enough time to actually have 100% of your loan go towards payroll if you wanted it to, and there'll be enough period time for that to happen.
So Dwight is asking the question about analytic software. What analytic software do we recommend for a small to mid-sized church? Not sure what you mean by small to mid-sized church, but Mortarstone tends to focus on larger churches that has a higher monthly cost. There's a program called Tools for Church that was actually created by a United Methodist pastor who was also a programmer before. So working inside the church, he has created one where the cost of that analytical tool is under $100. It can even get less than that. And so if you need additional information on it, just reach out and we'll be happy to answer that question for you. The same with Mortarstone. We do a lot of teaching around the use of Mortarstone. It's a great product out there. Tools for Church is a great product, but you need to know how to interpret the data that you're given from those. Stephen's asking the question, what resources are available to understand calculating depreciation expenses?
So yeah, again, you can go online and find, there's going to be different classes. If it's a capital or real estate, that's normally a 30-year depreciation schedule, 27-year depreciation schedule. Vehicles are different, office furniture. So there's different classes of depreciation based on its useful life. And you can actually download, even on Excel, there are different depreciation amortization schedules that you put in the beginning value, its useful life, what it will be worth at the end of that period. Then it will actually calculate that. I would guess, check with your accountant for your church, and they'll be able to set those schedules up for you.
So Bob is asking an interesting question. We have a mixed payroll. Some are paid monthly, some are paid biweekly. How does this affect our payroll forgiveness? I guess with the 24 months, it's going to be simplified, but they may choose to use the 8 weeks. Stan, what would you suggest?
So you would then do both calculations. So, let's assume you get paid, you received your funding in April. You're certainly going to be able to take May and June as payroll months. For the monthly ones, very easily. Then you can do your, I think it was a bi-weekly or semi-monthly, whatever that was, and you take the appropriate ones within that time frame. But certainly with it being 24 weeks now, then you could actually, in theory, do 3 months of the payroll on the monthly cycle, and then you do the bi-weekly, semi-monthly within that same 24-week period as well, and just take the full amounts on following the date of your receiving the funds, and including it, making sure it includes all incurred expenses at that point. There's plenty of time to do that without having to split your payrolls out otherwise.
So Jill is asking about the forecasting template that you provided. Should she start that at the beginning of the year or right now?
Great question. Depends on how much time you have and how much information you want to have. The longer the line, the more you'll be able to see what's going on. So some organizations are saying we're only going to start from COVID, maybe the Sunday before we had to close the doors and go online. Some are saying, no, let's go from January on, and then we can see the blips of, are there any changes? So, as soon as you start calculating your forecast and trying to figure out where you're at, the next question is, what was it before? So, you want to know what's the differences so you have context. So I would certainly encourage, starting with January this year. And what you might find is interesting, once you get that done, is go back and do last year, 2019, and lay it beside it so you can see the trends on week 26 this year versus last year. How is it different, if any? And that's where churches are saying, we're doing better now than we did before because of impact in spite of COVID. It's because they have those trend lines year over year to see how they're doing in comparison.
Annie asked, any update on the recent proposal that all PPP loans under $150,000 be forgiven outright without an application process?
So I'm unaware of that. Certainly we've been talking to the SBA, as have our colleagues, to say, at a certain threshold, make the application for forgiveness more simple, but at a minimum, there will need to be some, the application will be required, and there will be some basic supporting documentation that will be required by the banks, by the lenders, to get that forgiveness. It will not just be an automatic, but some of the larger loans will require, at a minimum, probably agreed upon procedures and possibly an audit that the bank may either require the client to do, or the bank may hire CPAs or someone, internal staff, to do some level of auditing of those loan forgiveness to verify that the amounts, the calculations are accurate. And that's an ongoing conversation that we're having with about 20 banks right now as a firm.
So John is asking about the EIDL grant and how that counts against the PPP forgiveness. It's just a straight deduction from the forgivable amount. Is that right?
That is correct, Joe.
All right. So Davis Turner is asking this question. Most of our contributions come in at the end of the year, much of it in December. Therefore, it's difficult to know what our shortfall in our budget will look like based on contributions to date. Members have stepped up to fulfill their pledges in the year, so the income at this time looks good. Any advice on how we plan for a decrease in giving in January, and any predictions on how much giving to the churches will decline this year? I'll start this one off, Stan, and you can add to it. So we don't yet know what the trend in the decrease in giving was in 2019. That should be coming out soon. We know that in 2018 it was around a little less than 4% on a interest adjusted basis. Your spending power went down about 4%. My hunch is that trend will accelerate. My sort of belief about the COVID crisis is that the trends that were in place are accelerating. So if you are a declining church, it's probably, unless you begin to operate differently, you're probably going to see that decline increase. The churches that were growing predictably are continuing to grow. So a couple of things. One, churches that are in that year-end giving, that's tricky. That's one of the reasons that I recommend churches like that consider changing your fiscal year. So it's also not your year-end. You've got time to adjust based on that year-end giving, which frequently is coming from high-end wage earners who are taking distributions and that sort of thing. Our recommendation goes back to the same thing that we're recommending with in the ministry funding guide right now, and that's to have conversations with your financial leaders. And I don't mean, those conversations are first relationally driven. So if you're not in conversation with your financial leaders, begin with, how are you doing? What can we be doing for you? How can I pray for you? As you begin to develop that relationship, you can ask, how are things going in your business world? What kind of impact are you seeing? And most people are going to be pretty straightforward about what they are experiencing, and you'll find that those conversations will drift around to their giving to the church. Particularly at risk are your tithers, who are giving a fixed percent, a high percent of their income right now. And if their income is going down, that may sharply impact your giving. So I would say it's going to come through the conversations, and then some of the obvious people who are prepaying their estimate of givings to you. I would ask them, do they envision any future giving over the course of the year, or is this it? If it's just ended right there, then you need to assume that that's the end of their giving, and you can forecast a decrease in your December based upon what you already know about that pledge being fulfilled. Dan, anything to add to that?
No, I think that's a great question. I think you've covered it well. The summaries would be, going back to our slide deck, if you will, the financial leaders give us a disproportionate amount. So making sure in relationship with them all year, and bring them into the question that says, how should we be planning? And not asking them necessarily personally, but have them help be a part of the solution. Because a lot of times the financial leaders tend to cluster, if you will, and they can work together. So, we've got a history. You've already identified, we've got national trends, and those are only set context. If your church is in decline already, or if it's in a growing position, go back and look at your own history to say what happened last year, and look at specific names. Who did the giving last year at this time? Now we know who the financial leaders are if we didn't know, and now it's a handful of people to talk to versus a long list that would be maybe impersonal through email or mail otherwise. But it certainly needs to be a relational conversation with those who have the biggest impact at year-end giving, and just ask them what they think, what they see, and how do they think others in the congregation may respond, and they will you know, even by not asking them directly, they will give you their intuition of how they're responding when they answer for a friend of theirs.
Right. So Joni is asking this question: are you saying not to share cash flow with the congregation, such as in the weekly bulletin or newsletter? And I don't think we've talked about that here. So I think what you're referring to is Horizons has been a long time proponent of removing financial data from publicly from like worship bulletins and that sort of thing. We recommend you use a communication lens of front porch conversation, living room conversation, and kitchen table kind of conversation. So front porch conversations is the sort of stuff you would speak to the world. You would put it in the newspaper, send it out in email, in open emails, that sort of thing. Living room conversations are people who are attending your worship services, and you can certainly get more intimate with them. But you've got visitors, you've got new Christians that don't understand the context in which you're communicating. So in the typical church, only about half of members give anything, and then only about half of those who give are given more than $200. So what we recommend is you have a kitchen table letter to those people who are giving more than $200, who are actively, maybe they're not giving, but they're actively engaged in other ministries of the church, and you would like to draw them into that group, and that you speak very clearly to this group because they are invested with you. It allows you to give context and to speak in say a monthly email where you are communicating the finances of the church very clearly to them. Extremely hard to do something like that in worship, and you can't in an offering, in a bulletin, put the context that you need in there. Now, offering talks are that perfect opportunity to share broadly, but again, you're contextualizing and you're generally focusing on stories of life change and impact. But a few times a year, you're going to want to talk about how you handle money. So for instance, a great opportunity to do that is when your annual compilation or your audit is in, we take the handling of your giving very seriously here. We have an outside firm that comes in and does this work. If you'd like to see that, it's available in church office. Talk about how your finance team works and controls. So there are opportunities to do that, but cash flow, whether we're up or down in the year, is not a conversation that I would have in any sort of public forum. I would save it for those who are invested in my church. Stan, anything you want to add to that?
No, just to follow your analogy, Joe, and I love that. I use it as well. Think about your own family. When you're having a big birthday party or any kind of celebration, a big cookout with the neighbors, is not the time to talk about your budget. And so Sunday morning is your celebration time when people come to join you together as a family. But rather your budget, is with those who have responsibility. So think of it as, as the parents in the home, you have responsibility for your budget. And when you've got toddlers, you don't really include them. You try to get them distracted, right, while you're nurturing them. But certainly as our kids became teenagers and started heading into college, and even now we have adult children, we include them in our budget conversations as a family around the kitchen table, literally, because they're involved and we want their input. We're sharing, here's what we can do, for college. Here's what we want to do for them as young parents now. And we talk about, our budget. We want to talk about our giving with them, our legacy giving. We're including our parents in conversations as well. That's the analogy you use, where it's only those that really have that vested interest and have some way to contribute. I've worked with enough churches that they'll have their annual meeting and share all this kind of information, and very few people show up, and very few people are interested in the actual numbers and the details. Those that are, it would be better to schedule and announce even, our books are open, we're happy to share, stop by and we'll go over in detail with you. So there is the transparency. But generally speaking, people just want to know, are we doing okay? What can we do to help? Let me know. So That's really the approach, is transparency, authenticity, but moving forward with those who have responsibility and have input and can make a difference is who
All
needs to know
right.
that.
Well, Stan, we've still got a number of questions out here. So let's move to a speed round. We're going to try to answer these questions with as few words as possible so that we can get as much information out there as we can. In a cash forecast, how do you handle items paid that are not expense? For example, money paid for a youth mission trip that had a fundraiser. Should our cash balance exclude these designated funds coming in and going out?
Yes, they need to be excluded.
All right. What was the impact to the 6:30 deadline to add back my furloughed staff?
That's been extended, and we'll have more guidance hopefully next week with the new rulings coming out from the SBA.
All right, we have a mixed payroll of only 2 employees. If payroll was paid in advance to meet the deadline, will there be any issues?
I don't think that's needed now because of the extended 24-week period.
Not a comment, but another new challenge is mail during the closure. Despite going to the post office to get our mail, all of it was not given to us. We received 4 weeks of mail this week. Hard to do cash management with that challenge. Just another nuance. Some people refuse to do online, so we have to honor their preferences. Yes, that is a reality. I do want to call to your attention that you may want to look at some of your internal controls that have changed because of COVID. You may not have the dual control settings, some ideas around how you can do that electronically. There is a white paper that's in Giving 365 that talks about internal controls during COVID. What are the expected tax filings for churches who have received PPP loans and hopefully forgiven?
We don't expect there to be any tax filing requirements for that.
Will the PPP changes coming, with PPP changes coming, will the reconciliation form probably be changed? I think that means a forgiveness form.
It will. So for example, we talked earlier about anybody getting tax credits from the Extended Family Leave Care Act. That is now being changed. So there's a lot of changes. So we will see more changes coming, especially after this new bill that's been passed by the Senate last night gets signed into law by the president, and then the SBA issues new rulings and new FAQs on that. So that will be changing.
So Angie is asking, does Shelby Next have analytical tools to help with the financial monitoring? The answer is yes. The church that I'm going to be coaching this afternoon is a Shelby Next, and they use Mortarstone because they're a larger church, and it allows for much easier, broader access and to control information that people look at. It allows them to have access to it, but not have name access to it. But yes, Shelby Next does have some of that built in. What was the name of the book that you held up and talked about in relationship to giving? It's actually Canoeing the Mountains. It has to do with adaptive change, which is the changes that you'll need to make in your ministry structure to live into God's best plan. We will have completely used our PPP loan funding by June, which is at the end of our original 8 weeks. When can we start this process with our banks?
So great question. That's one of the reasons why we're querying and working with about 20 different national banks or regional banks right now. They're on hold pending any changes from the SBA because they are, they're responsible for the underwriting of these loan forgiveness, and so it will be some banks are going to be redoing the applications themselves. Some are waiting for additional guidance. Certainly, right now with the changes coming out, there will be massive changes on all this that we will hopefully know more about next week.
Joy asked, you delineate specified monies such as the altar fund, missions, or pledges?
So by delineate these funds, if there is some kind of restriction on their use from the donor, then they are not part of the cash reserves. simply because they're not available to management to be used discretionarily around generic or general operating expenses. So if they're designated by the donor, they are not included in the unrestricted cash reserves.
Any recommendations on how to decide whether to take an EID loan, and if so, how to determine how much to ask for? We've already received the EID advance and now have been contacted that we're able to be considered for further loans.
Great question. Can you read that one more time?
I've deleted it off, but I think the question was, we took an economic loan to begin with. We've been contacted that we can take more. What would be the advantage of it? I'm guessing no advantage if it's being deducted from your PPP loan.
Correct. If it's being, you can only have one. So if you have the EIDL loan, it will automatically be deducted from your PPP loan. And then if your loan, with your PPP loan, once it's paid off, my guess is you might be eligible to come back for another SBA loan. I would say the only advantage to doing that would be if you need the liquidity, you need cash. That would be potentially a low interest rate loan, but I don't have enough details to respond definitively otherwise.
So Mark is asking how to record the receipt of forgiveness on the books.
Great question. So we're recommending that you would actually create a new chart of account number and description that would be called, the SBA or SBA PPP loan forgiveness contribution, because it's a gift, and that way you can always identify how much you received in as the loan, because you will have recorded it on your balance sheet originally as a balance sheet item as the loan amount and the cash in the bank. As it's being forgiven, the cash is being depleted, and your loan then and the expenses are being incurred. Then the offsets are going to be, the revenue will be your credit as a charitable contribution, or not a charitable contribution, but a loan forgiveness contribution. And the debit would then be to offset that liability on your balance sheet.
Thank you, Stan. There are a number of questions related to depreciation. That's thrown a lot of folks that are not used to seeing that. Would you go over one more time who this applies to and the vast majority of churches it would not apply to?
And I'm sorry, restate the question one more time. I missed that one.
Depreciation expense.
Yeah. Okay.
Who is showing depreciation expense? That's throwing off a lot of our folks.
So if you're on a cash basis only as a church and you don't have a balance sheet, then depreciation doesn't matter. You don't record it because you have not recorded the assets either. On a modified cash, a lot of times banks or churches and schools, ministries will have their bank accounts and list certain items, but not have a full accrual basis. So that's what we call a modified cash, where you kind of pick and choose. But generally speaking, larger organizations, ministries and churches who have large fixed assets, buildings and real estate that are worth a lot of money, will actually go with a full accrual, which means they'll have a balance sheet with assets, liabilities, and net assets. And that will then record the various restricted amounts of giving and the restricted funds that have a balance. And so when you have that set up, where you've got your buildings and you're doing a full accrual, then you'll want to have your depreciation expense every month that goes into your accrued depreciation. That would be for your buildings. It would be for your office equipment, your furniture, and any facilities, and a lot of times your technology and computer equipment. So larger, more what I would call sophisticated churches that are getting audited or review will, generally speaking, always go on an accrual basis, or at a minimum at a modified cash basis. And a lot of times on the day-to-day management, many churches and smaller organizations, for simplicity, would just go with a cash basis reporting every month, and then let their CPA convert those numbers to an accrual basis, when they're doing the audit and the review. So that may be some of the confusion of why when you send all your documentation to the auditors and they come back with a report and it looks different than yours, that's usually the biggest difference.
All right, Joni's asked a question of the giving bands to forecast or target, offering talks, or both. And the answer is both. Understanding who in your church is giving at what level is part of your development plan, because what we're looking to do is to increase generosity in all of those groups. We need to communicate with them differently depending on where they are. The people who are giving less than $200 a year don't need to get the letter that says, thank you for your generosity. We were able to do all these things, giving the impression that they are giving at a level that is probably consistent with where God would have them lead. So, I'm not saying we shame them. We don't do that. But we want to be very clear in speaking to each one of those different categories. Janie's also asking if how often we send out giving statements. Most often churches are doing it quarterly. I do have some that do it on a monthly basis. I would say if you're doing it on an annual basis, while you're maybe meeting the minimum requirement, you are not communicating with your donors. You're missing an opportunity. A statement in itself doesn't really move much change, but those stories of life change that you put into the letter is helpful. Most folks don't keep very good track. If they're sporadic attenders to the church, they don't keep very good track of the giving that they have given. Most people will dramatically overestimate how much they've given. How much they've been in church is what they've overestimated, because they're giving you $20 every time they come in. And this is an opportunity to try to move them from an inconsistent giver to a consistent giver, ideally on a reoccurring basis. This is a very specific question. We are a missional ministry arm of the denomination and have applied for and received the PPP loan. With the PPP loan, is the copy machine, business landline phone, and the business cell phone, do those expenses apply? If so, how do we account for this on the PPP loan?
So yes, those do apply, and there will be a section on the application where you'll list those items. And then we're fairly confident in talking with all the banks and reading all the SBA regulations that the banks will be requiring that supporting documentation, that the invoices, the statements indicating that here's the amount of the charge and an indication that it was paid. And so, but there'll be there's a section on the form, a little spreadsheet section where you'll add them all up, and then they'll want the supporting documentation to arrive at that number.
Mark asked this question: our PP loan is still sitting in the new account we created for it, with all the uncertainty around forgiveness has left us uncertain about what is forgivable, and hence we've not made any transfers out of it. At this point, I wonder why we even need to. Will we be penalized or looked upon negatively if that money just sits in the account for the time being?
I don't know that you'll be penalized, but it would certainly make sense that as you approach in the process of determining you've maximized the forgiveness of it, you might want to go ahead and then transfer it in when you do the application and put it in your general operating and close out the account. Once you've maximized that, just so that confirms the need for those funds and the fact that you've actually expended them. From a cash flow management right now, the fact that you left them sitting there while you're expending it otherwise is not an issue, but a best practice would be to move those funds over and close out the account when it's completed.
All right, we're down to just a couple more. With the change in pastor on top of all these other changes we're facing, how should we approach this in terms of giving and cash flow? I don't know your circumstances, Susan. In some denominations, it's common for churches to have changes in pastors. Others tend to have intentional interims that fall in there. So I don't really know your circumstance, but I would suggest that staying focused on your mission. Your pastor is only one part of the mission and ministry of the church. It is the mission and ministry of the church is still going to be ongoing, and that's what I would be talking about. That's what I would be encouraging people to support, and certainly I hope that you all are given or find an appropriate pastor in time, but your church is still the church. Without a pastor, or with a change in pastors, you're still going to be doing your ministry. All right. This may be part of the earlier question we had. This is an EID loan. We can take additional more than the advance, but not related to the PPP. I know the EID advance is deducted from the PPP loan forgiveness. This EID loan is in addition to the EID advance. My question is how to determine if we should ask for this loan, and if so, how much to ask for. We've been approved to ask for 1,000 to 150,000. I understand your answer is depends on if we need the cash and liquidity. Any other further considerations?
Yeah, I don't know that I have enough context in the situation of, a church organization, do they have other capital loans? Does it make sense to convert? If they had a mortgage at a much higher rate, can they convert and pay it off with this and do it differently? What are the terms of the idle loan? That would be happy to help, but we would need a lot more information to be able to really answer that question. It's too open-ended, unfortunately.
Any clarification on if sewer and trash is covered?
Our understanding is that water and sewer is. It's still unclear if trash is. And I would say at this point, given the extended period of time, that almost becomes moot. You can certainly have plenty, you've got extra weeks of other occupancy costs that have been cleared, substitute with those.
When should we apply for forgiveness of the loan application? I think that's when you've met the terms of forgiveness and your bank is ready to receive them. Horizons has a PPP loan. Our bank said until the legislation is through, they don't want to take any applications because they know they're going to change.
That's exactly our position is, banks are saying they're not ready to process them yet.
Is septic covered? I don't know what expenses there would be that I guess would be aligned with sewer. You've got to pump a septic system. I know there's some who have their own operational septic systems that are large and require labor and other expenses. Do you know if that's covered under sewer?
That's a very specific question. With you, certainly we know that water sewer is, septic normally would not be. So if it's a repair, probably not. If you're a large campus and you have your own, water treatment system and septic, if you're, like a college or a large church campus, and for some reason you actually have a water treatment facility, that may or may not. Again, that's so unusual and specific. I would not want to comment otherwise.
All right, last question. Larry asked, our church owns several farms which are good and bad for our regular giving. Any idea on how to approach these farms? The wills do not allow us to sell the farms, and we can only use the income for certain expense items. Any suggestions on how to approach these? This sounds like a case you need to take on for a fee because it's going to be complicated.
That one's complicated. Yeah. The fact that you say, in that sense, the church inherited them through a matured state gift. There's a lot of definitions we need to have before we can, really answer that. But conceptually, at a minimum, unless it's a large amount or it's a significant portion of the income for the church, I would say you might want to just, figure out an average. and not make it part of your actual budgeting if it's that volatile, if you will. So you're not dependent on it, but it just becomes something that, you know, funds extras. And then you just, you know, if it's specific for only certain ministries, you fund it first with general funds, you replace it with the money when it comes in, then that unrestricts the dollars otherwise. There's a variety of strategies, but, you know, I can't be real specific otherwise, except if you don't need to depend on it for budget purposes, don't, and then just let what comes in be surplus dollars to cover those costs.
Two more questions came in real quick. One is about charges for the sprinklers on our water bill. I assume that's covered under the water.
If it's on the water bill is covered.
Right. And the last one, Christian school, our payroll list drops after the original 3 months of payrolls needed due to our annual contract. Will this hurt us?
It will not hurt because that's some of the seasonality that we're looking at. And so you can actually do some comparisons there. So we'll go from that.
Well, Stan, you have been a trooper. We answered, I think, 55 plus questions. You helped with the presentation for an hour. I thank you for the work that you've done. Cape and Krause does this for a living. If you would like to retain Stan to help you with some specific questions, they are, as I mentioned earlier, the largest accounting firm that deals solely with churches and nonprofits. It's their work. What's unusual about them is that Stan is not the only pastor who's on staff there. They have a number of clergy who have become CPAs and do this work serving the church today. I want to thank you. I want to remind everybody that the download will be available tomorrow, along with the slides and the resources that we have talked about. You can get at horizons.net. You can download from there the funding guide. You can download from there the articles that have been written by Cape and Krause. And so we wish you all a great day. We still got an incredible audience left after almost 2 hours. Thank you very much.